Hello and welcome to the Weekend Investing Daily Bytes. We are shooting this episode on 18th of April. And what a roller coaster of a day we had today. Markets opening very nicely up. And then sometime towards the afternoon, there was a sudden slide down, and there were some, as of now, we can call them rumors that the government is looking for, uh, you know, more changes in the capital gain structure. That is the rumor that was floating around. The explanation given was that there is a lot of inequality in the country, and hence taxing the folks who have some capital gains is being considered. There was some report from 2019 that is being considered again, but finance ministry was very quick to dispel this rumor. However, the market still did not recover fully post this news. There is some sense that there is no smoke without fire, and hence people are still cautious about this denial. In terms of the market structure, as I've been mentioning, last 2 days have been a good corrective move after 8 or 9 days of an uptrend. The last 2 days have not, breached the trend line that was broken, and hence we are still very much into this leg upwards. I don't think we have, abandoned this entire move yet. Uh, so from that perspective, it is a good consolidation that is happening here. And post this consolidation, we'll have to see where the market heads towards. So nothing lost really, but yes, some of the profits have been, taken off the books. The makeup of Nifty heat map is there in front of you. Reliance leading the rally down at minus 1.1%. Some FMCG stocks down today. Britannia, ITC, Levers, Nestle was still up. Banking was flat. Some PSU banks were actually up. Some private banks were also up. IndusInd Bank being notably amongst them. IT stocks were totally flat. TCS, Infosys, HCL Tech, and Wipro did manage to eke out some gains. And steel, cement, commodity stocks were also down. Autos were flat. So nothing really much happened today, except in pharma space where some stocks did manage to go up. And you can see here in the sectoral overview for the day, pharma clocked the maximum gains at plus 1.6%, mainly on back of Lupin, Davies Lab, etc. Real estate continue to do well. DLF hitting a new all-time high, new 52-week high. PSU banks, as I mentioned, also doing quite well, plus 0.8%. IT stocks making a small comeback. Most other sectors were either dull and down, with energy and infra losing the most, along with FMCG. So this was the makeup of the day. Nothing really exceptional for the day. Exceptional move happened in the mid cap index. So you can see here that it took a rest here after 2 days of run here, but post that it has had a 7 days of consecutive run up. So which is very good, and we are now near the previous top here at 31,240. So this is where maybe some consolidation may come, and then we may take off. It is also attempting to make a inverted head and shoulders pattern. Small caps were consecutive 11th higher close today. I eyeballed the last few years of small cap index, and this has not happened in the last decade, I think, or even more maybe. So extremely good follow up buying that has come around in the last 11 days, although very minor gains on a day to day basis. No big, the big moves only happened in the first 2 or 3 sessions, but after that it has been minor gains going up. Nevertheless, it is consolidating well above the breakout line, and this region of 9,200, 9,300 may be the asset test for small cap index also. Nifty Bank remains the strongest index out of these, very nicely broken out, and the last 2 days also it has not fallen. Yesterday it had given up some of the gains, but still closed higher. And today it has closed absolutely flat versus the previous day. So overall, reasonably still in strength. The main indicator for emerging markets to go up remains the US dollar index, and that is also humming around this 101 mark. I was waiting for, if a collapse below this. It has not yet happened, but the setup still remains very, very robust for this collapse to happen. And once this does go down below 101 and stays below, we will definitely see emerging markets, precious metals doing very well at that period of time. One stock for the day which looks really good is Rail Vikas Nigam. You can see that Rail Vikas Nigam went from 32 to 82 rupees last quarter of the last year, and then it has been sort of in a flag-like formation, and it has now tried to knock on this door for the fourth time, and with each knock, it becomes more and more higher probability that it will go through. And once it goes through, this flagpole pattern can really take it very, very high. So from that perspective, wait for this 77, 78 to break out. And once it breaks out, choose your setup, trade setup, and try to get into there. So larger topic for the day is, should we worry about the US banks? We've seen some US banking failures. The Silicon Valley Bank, we saw, just collapsed. Last year, it went from 700 to nearly 250 by the end of the year. And this year, suddenly it has gone from 300 to virtually zero. So this is something that has happened in front of us. In terms of the signature bank, also the market, these are market cap actually, not the price. So the market cap has collapsed and has gone to virtually zero. So this is how, so two of the well respected banks in the venture capital space have gone bust, and some are wondering if we are sort of in the same bubble as we have seen in the past, etc. So the short answer is no, that we've seen only two banks failing. You may say only two banks is not too less, but the point is that the economy has remained very, very strong in the US. And in the Indian context, the Indian banks are sitting with great balance sheets. I mean, the balance sheets of 2010 to 2015 are totally cleared up now. A lot of NPAs have been cleared out. I think PSUs have done a fantastic job in cleaning out their balance sheets. Private banks were, of course, very, very robust even earlier, and now they are even more so. PSU banks' prices have shown that impact of the cleanup by spectacular record run of 275% since COVID lows. So PSU banks have been one of the best performing sectors in the market since COVID. So Indian banking remains very, very robust. And while US is like a mother market to all other markets, but the impact that the US had on all other markets is diluting a little bit on a year-to-year basis, as the trade also reduces. Like I was reading somewhere that the dollar trade has now reduced from 56% to 48% within the last 1 year only. And that is a huge drop versus the incremental drops that we were seeing for the last 2 decades. So, within the next couple of years, there may be some more huge drops that may happen, and the US dollar and the US markets may have lesser and lesser of impact on all other markets. Just to give you some history, so 2023 so far, we've seen two bank failures, $319 billion in assets. In 2007 to 2014 period, when we had the GFC, more than 500 banks collapsed in the US with $960 billion in assets. Prior to that, between 1980 and 99, in 1995, more than 2,900 banks had failed with $2.2 trillion in assets. So we've had a humongous history of banking failures in the US, and that has not really, come around this time. So, in terms of comparison to prior period bank failures and the amount of assets that were there, This is still, no comparison really. We If there is a big failure in the markets, it will be preceded by, huge banking crisis. That also does not seem to be happening. At least as of now, the Fed is very, very proactive in saving the market as and when is required. And this is the chart where you can see that, the number of bank failures, kind of peaked in 1980s, and then, in the 2008, you had a huge crisis again, of so many banks going under. And so far we've not seen, any larger amounts of banks going under. So while this is not a necessary requirement for a recession to happen, but it does seem like that, there is more proactive control this time. And India, of course, is in sitting in a very, very good condition. Um, Also, more history, if you want to see, 1921 to 1929, average of 635 banks failed per year, and 9,000 banks failed between 30 and 33 post the recession. So, I mean, whatever happens post recession, we will see if we get one. But I mean, we are very, very well placed. This is the recent Bloomberg infographic where they have somehow calculated the recession probabilities worldwide, where UK, New Zealand, US, Germany, Italy, Canada, France have all has 50% or more probability of going into a recession, and India has been calculated as 0%. So that is the kind of strength the India market is currently displaying, portraying. We are 5% from all-time highs, somewhere around that, 5 to 6%. So all signals are pointing towards a very robust time period coming for the Indian market. If in case these recessions do hit these countries, we may get a hit also, but we may, have a slower growth year. That is sort of the worst case scenario that is being built in right now here. So there is not much to lose from here. The valuations of the market have also come, very close to long term averages, and the market has had a year and a half or more of consolidation, time correction. There is absolutely no reason to fear the market right now, and that's why we continue to believe that you must remain invested. You must continue your investments coming into the market, because we will never know once the market hits an all-time high how long it can keep going without our anticipation. This is all I had for today's episode. Thank you so much. Let me quickly go and see if I have any questions. Just give me a moment. So one question is from Tarun Grover. Is Infosys a good buy at CMP? So Tarun, I would request that you go and watch yesterday's episode. It is there on the ET page also, and it is there on our YouTube as well. So that will give you a great idea. We had covered this topic yesterday. So my request is please go see that. Rohit Rajan says, why Nifty Bank took a sudden hit today? As I mentioned earlier in the episode, there was a rumor that there is a cabinet meet tomorrow to discuss changes of capital gains taxation, which was very quickly denied by the finance ministry. Nevertheless, the bank Nifty did take a hit. If I can show you that chart here. So there was this sudden fall at around 1 p.m. Of about 500 points, 450 points, which was partly recovered by the end of the day. But nevertheless, this was a damage done to the market by speculators. So let me know if you have any other questions. I have another minute or so on this episode. No, I don't seem to have more questions today. So thank you so much for watching, and I will see you in the next episode. Bye.